The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And given the focus on small caps today, the stock of the day is Artrya. Now, the company has received US FDA clearance for its Salix coronary autonomy product. So, this product caters to assess coronary artery disease, which is the world's leading cause of death. CEO Matthew Regan says that coronary scans frequencies are growing at a rate of about 6% per year in the US. So the FDA approval now paves the way for that commercialization of Salix in the United States. And the stock is up by more than 11% just past noon here in Sydney. Dean Fergie from Cyan Investment Management. Not sure if you're familiar with this company already, but what do you make of the news?
Certainly nice for the FDA to be giving some positive news to the market after what happened with Artrya the other week. Look, Artrya is an interesting one. It listed in 2011. I think they raised $40 million, and since then they've raised kind of another 15, I think, in the market. So it's been a pretty capital-hungry business. You know, despite the fact that it's up strongly today, it did list, I think the IPO price was $1.35, so investors are still underwater. But during the period, I think it bottomed out at like kind of 20 cents. So it's been a pretty good uplift since then. Heart disease is a big issue, and I think the medical industry has been slowly adopting artificial intelligence. So their technology, as far as I understand, can look at an angiogram or a CT heart scan and say, hey, look, there's a problem here, can write out a report, and it can obviously do that to a level that the FDA is comfortable with. So that, I think, is really positive. I think the excitement about a business like this is that a software development business is very scalable. It doesn't have a significant market cap. Even after today's rise, it's about $90 million. It's got a decent amount of cash in the business. I think they're also looking at trying to get cleared another product for heart disease as well. So for me, look, I think it's been pretty significantly de-risked, still trading below its IPO price, still pre-revenue at this stage, not terribly well covered by the market, but I'd say it's one to have a look at. Importantly for people that want to have a look at it further, I think they're doing at midday on Monday a teleconference that's open to everyone. So I think it's worth a further look at and could be a decent performer in the coming years that they start commercialising this product.
So is that a specky buy?
Yeah, I probably would say it's worth a speculative buy. I think as we go forward, there's more upside than downside. Granted, all these biotech health businesses are always speculative, but I think, chances are for me, there's more likely that we see further upside than downside. Certainly that they've cleared such a big, important hurdle, such as FDA clearance.
Got it. And just while we're on it, I will give credit where credit is due. The last time I had both of these gentlemen on the program, they gave Artrya a miss. Okay, that worked out well. Yeah. Luke, what do you think of Artrya? I'm actually going to be speaking with the CEO on Monday. Like, what would you want to hear from him in the way of assurances to get your investment dollars?
Yeah, well, I mean, tying into the news today, obviously the US market, it's the white whale for every biotech, medtech, just the size of the market and the dollars behind it. And I guess the key question is now, how do you go and attack that market? Dean hit on the key word for me, though. I met with these guys a few months ago, and what I liked about the investment pitch back then was, as Dean pointed out, it's a scalable business. You see a lot of these biotechs, medical device companies, and you might get your initial approvals, and obviously that's good. You can now go and sell your product, but it's then very capital hungry. Manufacturing devices or having to put on, sales teams all around the country to try and sell drugs into a very competitive market. These guys, their software overlays, it's system agnostic as they put it, it overlays onto existing processes and systems already inside these hospitals, and is just the AI analytic overlay to the scans that are already being done and collected. I think the data was trained on a 20-something thousand data set provided from a bunch of Australian hospitals from memory. So I quite like that idea that you're not trying to upend someone's workflows and processes. You're simply coming in and coming over the top. The main question I've got is, how do you attack the US market? They're talking about a different monetization. Over here, it's traditional SaaS. Over there, it will be sort of revenue sharing based on per scan. Getting your head around all that, the addressable market, it's super early days. It is super speculative. But I actually agree with Dean. I think from where you sit today, the balance sheet's de-risked from a raising they did a few months ago. They got 15 mil in the bank. You've got your FDA approval. You've got a product that is very scalable. And so, for the right investor, again, if you're someone in pension mode or something, you're not even looking here. For a micro-cap investor who wants upside, this is the sort of stocks you're looking for. I say it all the time. There's a reason why we like technology stocks. They're so scalable, and when they win, they really win. So I found these guys very impressive. Today's announcement, obviously very nice to just get that tick of approval from the FDA. And so, the key question I think from now is, how do you go and attack it?
Specky buy?
I'll go the same. Yeah, we'll stay positive. Why not?
Well, it's a Friday, isn't it? Look, great to get a view on Artrya.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.